All right, welcome back to the YouTube channel. In today's video, we're going to talk about why you were denied with the 700 plus credit score as a coach or consultant. Now, before watching this video, you went to a bank, your own banker told you we can get you $100,000 to $200,000. I got you. So you applied for it, but got slapped a denial for this reason. Sorry, we couldn't approve you. And you're wondering, okay, why was I denied out of a 700 plus credit score? All right. Stay tuned in this video. I'm gonna be breaking down the pitfalls of why you got denied and what you need to actually avoid so you can access $100,000 so you can scale and invest to your coaching business. Now, if you guys don't know me already, my name is Daniel Dixon Jr. and I help coaches and consultants access $100,000 to $300,000 in business funding so that you can scale and invest to your business. All right, and if you haven't already, okay, go and click the like button and go and click the subscribe button too so you get notified whenever I post and you get notified whenever I'm dropping these gems and sauce for y'all. And we are bringing back a whiteboard video today, because this is where it originally started when I first had the YouTube channel. So why not? With that being said, let's get straight to it. So when you're trying to get business funding from a bank, okay, or a credit union, okay, we call these financial institutions. They're going to look at three main things. The number one thing that they're going to be looking at, one, is your credit profile. Okay, next, they're going to be looking at your business structure and age. And number three, your banking relationship. Okay, if you get denied for any of these reasons, I'm going to explain later in the video. It comes down to one of these three things. So just understand that. Okay, it's going to come down to one of these three buckets. Okay, now, if you have bad credit, okay, you know that you need to fix it. So if you already know that you have bad credit, you know that, okay, if I just get a 700 plus credit score, I should be good. That mindset alone is the reason why you found this video, because you tried that and you still got denied. So what's going on? You have to understand the mindset that even if you have good credit, okay, it's just like baseball, okay? There's a whole new different ball game that you got to play into. So you thought that by getting a 700 plus credit score, now I'm here. But even after you get a 700 plus credit score, you got to understand that the financial institutions, they're at this level. So there's a whole nother level that you have to play. There's a whole new ball game that you have to play. So because you have that mindset, that's the reason why you're getting stuck with denials or low limit approvals. I'm going to be breaking down exactly why that is. Okay, so you have to understand that. So, okay, now when we talk about why you actually got denied with a 700 plus credit score, okay, you probably right now you already have a 700 plus credit score and you have good comparables. Now, what do I mean by good comparables? What I mean by good comparables is this: the credit limits that you have, as far as like revolving, like your credit cards, stuff like that. The banks, they want to see that you have at least $10,000 to $30,000 limits. Okay, that is an important factor of your credit. But because you have the good credit score and because you have the good comparables, you thought like, okay, like this should be good. This should be an easy approval. That's wrong though. So let's talk about why you got denied and the three main things of what's happening. So number one, okay, your credit profile. Okay, understand that your credit score is not what gets you approved. It is the credit profile. I see this a lot with coaching consultants. Okay, number one, the main reason why you get denied because you have good comparables and good credit score, it's sure because you have too many accounts and too many recent inquiries. Okay, you have to understand that the mindset when it comes down to these banks, their number one goal is to mitigate their risk. And what do I mean by that? Daniel, what do you mean by mitigate the risk? I'm not talking about litigation. What do you mean by mitigating the risk? You have to understand that, let's just say if very recent, okay, you applied for some credit. Let's say you got 30 to 50K in just recent credit, right? Let's just say you got that very recent within the last 3 months. You have to understand the mindset behind the banks. Let's just say if you were to, default, because they're always mitigating the risk, they're always evaluating the situation, right? If you just got this recently, and let's just say that some natural disaster happened or some emergency happened, you had to wipe all your credit, or something happens where you couldn't pay back. Let's just say you lost your job. That bank is now looking at you like, okay, they just recently got a bunch of this credit. If something were to happen, we are most likely not going to get the money back, because they don't technically, it's not a UCC filing where it's like first position, but it's kind of the same way. Because you're already 30, 50K in the hole, let's say you lost your job or something, they're not going to get they're not going to get their money back. So why should they extend you $100,000? If something happens, they're not even going to get it back. Okay, there's no the chance of them likely that you're going to pay them back and they're going to, get recoveries, is slim to none. So why should they give you funding? That's why if it's too many accounts with too many inquiries, it's too recent. They want to see how you build that relationship. They don't want to see how well you handle that recent 30 to 50,000. Just keep that in mind, okay? And I've actually had some clients to where they had too many accounts, too many inquiries. Their limits didn't match it strictly because it's just too recent. You gotta let the account season. Next, your average account age is less than 3 years old. Okay, this makes a lot of sense because why should they give you a large amount of funding if you only have an average age or your credit age is only 8 months? That's not a long enough time. They're giving you a large portion of money. So they want to make sure that the business owner that is going to personally guarantee this, okay, they've handled some credit. 36 months is a good time frame. That's not the best, but I say minimum 3 years. Okay, 36 months is a good time frame of average age of all your accounts to get the bank's confidence to lend money to you. Next, if you have a recent late payment or an old charge-off or collection. Okay, I've actually seen this recently, right? Where a business owner that I know of, right? They had a recent late payment. Okay, and it's just like their scores dropped all the way down to the 600s. Like this stuff sucks. Okay. It was like a high 600, like 690 or something like that. One of the scores was 700, but the thing about that is that even though it dropped the score low, it's the credit profile now shows a recent delinquency. Anything that's recent is bad. Any recent derogatory, any recent delinquency. You can still have a 700 plus happiness, and I've seen this across profiles. Okay, if you have a recent delinquency, it's gonna really lower your chance of getting denied and raise your risk status. It's a delinquency. Banks hate delinquencies. They were late. Okay? If you show that you were late with something, they were okay, what happens if they're late with us? Are we gonna get the money back? So they don't want to take that risk. And even if you have an old charge-off or collection, okay, you're still risky. And you have to understand that if you have a recent late payment or old charge-off collection, if you're trying to get approved for a house or a car, like that's different because that's secured. If you were to default, okay, they're gonna have a repossession, right? They're gonna have to foreclose on your house, right? They're going to evict you, okay? They're gonna be able to get the asset back, but this is unsecured funding, so they're gonna take higher measures because you're personally guaranteeing this. Unsecured, they're gonna take higher measures. That's why it's a lot more challenging to get access to funding with, recent late payments or derogatories that are even old, anything of that sort. Next, any fraud alerts or freezes. Okay, if you have a freeze, first off, they can't even pull the report. So unlift the freeze, my guy. All right, unlift the freeze. And then our fraud alerts. You got to really think about the psychology behind this too. If you had a fraud alert on your profile, right, you claiming your identity got stolen. If they were to give you funding with the fraud alert, you got to understand that they think that, hey, this person's, their identity is stolen. So somebody's out there just applying for, applying on their behalf. So we get them funding, then the person that has, got their social security number, whatever that it is, they're just going to apply for stuff. We don't know if they're going to pay it back because that's not the person. So remove that fraud alert. Okay, there's just a bunch of different mindsets and psychology going behind the banks. So remove that fraud alert. Next, okay, unverifiable personal info. I've seen this happen, okay, with just funding in the past. If the banks can't verify the person that they're giving funding to, why should they even give you the funding? Like if they can't sit there and verify, okay, if you have too many different addresses, too many different names, too many different employers, like who is the actual person that we're funding to? Okay, it has nothing to do with your score, your comparables, but because they can identify who the person actually is, that could be a reason why you get denied. So understand that. So that's going to take care of the credit profile. Let's now talk about number 2, the business structure and the business age. Okay, so one of the biggest things that I've seen is going to be bad LLC history, right? Now, if your current LLC that you have has bad LLC history, okay, I would just, like I said, totally suggest just starting a new LLC, okay? Because if they see in the past, okay, well, this LLC already took out business lines of credit, it's just like, or a business credit card, it's just like personal, okay? This LLC already has bad history. Why should we get them funding, okay? Now, what most people do is that they'll try to start a new LLC, which is cool. That's what I would suggest doing too. But even with that, you have to understand that, these lenders, okay, there's databases that not only there's Dun and Bradstreet, Experian, Equifax Business, okay, you have SBFE. Okay, sometimes if you defaulted with an old LLC, and let's say you personally guaranteed it, okay, that there's sometimes they're going to link, okay, your social security number, okay, I just misspelled that, your social security number, right, to that old LLC. And this was happens with a lot of people. So you can try starting a new LLC. Okay, but if you don't resolve that, right? If you don't resolve that with the old LLC, and if you try applying for something under the new LLC that you personally guaranteed, sometimes they can still link that social security number to the old business Okay, so that's probably why you're still getting denied, even though you've already paid them off, rebuilt the credit. If you haven't resolved that with the old LLC, that is the reason why you can still get denied. So just keep that in mind. Another thing, okay, less than 2 years of business. Now, most people see this, okay. It is very possible to still get funding less than 2 years in the LLC. Okay, we funded LLCs, right, a day, 30 days old. Like, it's still possible. But if you want to get higher amounts of funding, for the banks to feel the most confident and the most comfortable, they want to see at least 2 years of business. And why is that? Why is it that they want to see more years in business? And the reason that, okay, there is a statistic to where businesses usually fail within 5 years, okay? If you've shown your LLC, right, with great credit, okay, great business structure, great age, if you've even had, built up some business credit history, which we'll talk about later on, okay, we'll dabble into that. But if you build some business credit history, right, and it's older than 2 years, or just having the LLC just established longer than 2 years, that itself is going to put you to a higher bucket of a lower risk than an LLC that is less than 2 years. Now, like I said, it's still possible to get funding with an LLC that is less than 2 years, but automatically you're going to put into a higher risk category because of that statistic. Businesses typically fail within the first 5 years. So if you can survive that, great. But just understand that there's going to be extra scrutiny. They're probably going to look at you a lot more cautious. And depending on how the other factors work, you can still get denied because your LLC is less than 2 years old. So keep that in mind. Okay, next, okay, UCC filing. This is pretty mandatory. If you have a UCC filing with another institution, they've already got first position. So if this bank sees that you have a UCC filing, okay, you're probably going to get a lower limit, or they deny because automatically they're thinking about, okay, how are we going to mitigate the risk? And we lend out this person, well, we're going to be second position. We're not even going to get the funding back. So that's probably another reason why he got denied. Next, okay, unverifiable business information. Okay, I've actually seen this before in the past. Right, we've actually had clients like from my own mistakes. Like I said, I'm in the field actually doing and testing this stuff. Everything that I'm telling you, I'm testing. You have to understand that this information, right? If you join a old school community, or watch some YouTube videos from like 2 or 3 years ago, you have to understand that banks are always updating their information in real time. They have quarterly reviews. They have to check stuff, okay? The information that worked 6 months ago probably is not going to work today. This is real-time information versus somebody that's just on YouTube or telling you, hey, I can get you $250,000 in 30 days. I'm going to answer that question at the very end, but it just does not work like that. There's certain factors that come into play, and I'm telling you this as a funder that is funding in real time of what actually works, okay? Unverifiable business information. If the banks, it's the same thing as personal information. If the banks can't identify, okay, who was the business that we're actually lending to, okay, why should they lend the business over 6 figures of funding? Like, you got to make it make sense. If somebody randomly came down the street to you and was like, hey, can I get some funding, or can you lend me some money? Automatically it's going to be a no, because you want to learn more stuff about them. What do they need the funding for? Who have they lent, borrowed from in the past? What is their history like? Who is the person? You don't want to give somebody funding that's just going to take the money and do some crazy stuff in the world. It's the same stuff with the business. Like, it's the same thing. So put yourself in the bank's shoes. Ask yourself these questions. If your business information can be verified, right, on the business bureaus, right, Experian, Equifax, Dun and Bradstreet, if it can't be verified at the state level, right, the Secretary of State, right, if it can't be verified, with the IRS at the government level, there's a lot of different things where, like, if it's not verified, right, think of it like a step ladder. There's a bunch of levels. This is something that we take care of our clients. So if you come work with us, you don't have to work. You don't have to worry about these things. We do this stuff for you, right? So if all this stuff isn't verified, if one thing is off, that could cause a denial. And that is something that we do for our clients. We do an audit. We book a call, right? You hop into the program. We do an audit. We make sure that everything is verified across everywhere. So instead of applying blindly or going through these things, right, it's done for you. You're going through it with a smooth process. Okay, next. You have an incongruent or a risky business address to the line of work that you do now. Okay, you're a coaching consultant, right? You already know the line of work that we're doing. You're consulting, okay? And majority of y'all, if you're consulting, you're a coach, you're probably just gonna do it at home. But I know some of y'all probably have, offices that you actually operate out of. Now, the reason why I'm saying incongruent or risky business address is because a lot of people, okay, let's just talk about a lot of people they've been doing like the last 2 or 3 years. They've been creating consulting businesses, getting a virtual office address and just applying for LLC and getting funding. Okay. And one bank that is actually cracking down, that's what I'm saying, you have to know what's happening in real time. Okay. One bank that's really cracking down is Chase. They understand the play of people just starting a new LLC and just getting a virtual office address, starting the LLC within a month, getting funded like 50K smack and going through an RM. Chase is really cracking down on that. So that's what I'm saying, like getting access to 250K in 30 days. All these people are telling you this, like banks are changing in real time. That was a real data point from May of 2026. Like this stuff changes in real time. If you're not really funding, you won't know this. Okay, so if your business address is incongruent to the industry that you're actually doing, all right, or if you have a risky business address, if you're using a virtual office address, if it's a PO box, okay, or if it's a private mailbox number, those aren't real, those aren't real operating addresses, right? Those are just private mailboxes. They're just postal mailboxes. Banks don't want to see that. Banks want to lend to a legit business doing legit operations. And if you have a business address, right, that's just not congruent to the line of work, that's the reason why you're going to get denied. Okay. Next, you're positioned as high risk. So again, you guys are coaches and consultants, but as an overall, you want to get very specific on what type of consulting that you do. Okay, make sure that your actual name is low risk in the industry, which consulting or coaching business is low risk. Okay, and even that is going to play into who you want to partnership with the bank, because some banks, okay, right, they don't want to work with consulting or coaching businesses because they think that is high risk. But being specific on exactly what industry, like what specific consulting that you do, is going to help you even further, right? Next, didn't foreign file. Okay, this is going to be another one. I see this all the time. I even had some experience with this in the past. If you wanted to create, let's say, your LLC in like a privacy state or out of state, like Wyoming, Nevada, like all these different things, unless you're making a lot of money, right? You need some real privacy and protection. There's no point of doing it. Like if you're making $250,000 to $100,000 or I don't know, $300,000 a year, what you need to hide for, my guy? Like if you're doing legit business, right? What do you need to hide for? Okay. Now, if you actually did create that, what you want to do is you want to file a foreign entity in the state that you're actually in. That's going to allow you to get funding a lot more, because what the bank's going to be looking at, well, why are they private? So now they have to do more research on you. Okay. Now they're always thinking like, okay, does this person sell a product that is illegal or something? These are the thoughts that are going in their head. So positioning yourself to where you're low risk is going to get you the funding. So make sure you do a foreign filing if you file it out of state. Then lastly, okay, you have no business credit history. Okay, business credit history is building it is very simple. You start off with just the regular NAV, eCredible, some easy net 30s. And the reason why you want to build business credit history, because you're getting funding with the LLC. It's just like personal. Okay, the bank's data points, they're always changing over time, right? And let's just say if your credit score is great or you have good comparables and you're not showing, like I said, financials, a lot of the times these banks will still check the business credit history. Let's just say if the credit profile isn't up to date, up to par, or the next thing we're going to be talking about is your banking relationship, they probably will check the business credit history. You don't know exactly what they're going to check, but it's always a possibility. And if you have no business credit history, it's like, why should they give you some business funding? Okay. Now, those three things that I talked about, like NAV, eCredible, those net 30s, those are good starters, but in order to get the higher lines, you definitely want to start off with actual business products, right? Getting business credit cards, getting business lines of credit. then getting business term loans, and just keep stacking up to actually build legit business credit history. Okay, so that's going to be the second thing. And the third thing, the last thing I'm going to talk about, which is very overlooked, is your banking relationship. Now, some banks, they don't require a banking relationship. You can just literally apply online, and get a nice approval. And we do this for our clients, okay? But most banks up to date now, especially the top national banks, they want to see a banking relationship, okay? They want to see you have a relationship with the bank, even a lot of credit unions and regional banks. They want to see a banking relationship. It's 2026, it's not 2021 anymore. It's not like you could apply it online and not season the account. They want to see these things. They want to know exactly who are we doing business with. They want to do a partnership, okay? You give them money, okay? You let it season. You have cash flows, deposits. That's going to make the bank give you higher limits, because you have to understand how the banking system works, right? The banking system works how when you put more liquidity into the bank, we have more cash flow. You're giving the banks more money, and how the banks make money is by lending money to other people on interest. So when you're putting consistent deposits, and you're putting liquidity into your bank account, the bank can then use that to lend out to other people with interest. So you're helping them make more money by the more money that you give them and let season. And on return of that, they see that, oh, John just made us some money. We're more willing to give him more money, because we know that he's consistently putting money with us. And if we give him more money to make more money, that money's gonna generate more money to put into this account, so we can make more money. Okay, it's transactional. Okay, everything is transactional, but that's the mindset behind the bank. So this goes down. If you probably got denied because you had no liquidity or cash flow going into that account, okay, or it was just a ghost account. Okay, you're not even touching that account. So having liquidity, having cash flow go into it. Now, here's why I'm saying this. I'm mainly, that section was mainly speaking to the people that aren't generating the cash flow. If you're already doing 30, 40, 50, or like $100,000 plus a month, you have cash flow. Like you can show these things. It's going to be a lot easier. But for those people that are just starting a new LLC or aren't generating that much cash flow, okay, the banks want to see seasoning. This is real time. Okay, I'm in the field, so I know what works and does not work. Every time we've got a client funding that had no liquidity or cash flow, or a ghost account, they got a lower limit. Every time they had cash flow or liquidity in that account, a high limit approval. They didn't say, excuse me, it's not every time, but the chances of that happening is very high. Okay, next, okay, if you tried applying for with the bank, you open up a business bank account, you probably just didn't let that bank account season enough. Okay, I've tested this myself. And I've gotten denials or low limits because we didn't season the account enough, but the accounts where we actually let season, smacking approvals, okay? So understand that, let the account season, okay? Some banks, like we have another bank where it's no money in the personal account. One bank that will check this, I just had a recent data point, is Wells Fargo. So Wells Fargo is a bank that will check the money that you have in your personal account to determine how much money that they want to give you on the business side. Okay, so that is just one account, one data point to where, like, if you don't have any money in there, you could get denied, and that's probably why you got denied if you were to go with Wells Fargo, because you had no money in the personal account. They're going to look at the overall relationship with that bank, not just business, but they're going to be checking personal. And then lastly, if you have any non-sufficient funds or overdrafts, that is signaling risk, and you're lowering your internal banking score because you couldn't pay for something. You had to go to an overdraft where the bank had to take care of that. That doesn't look like a good look. So all these things that I'm saying right here, having cash flow, liquidity, having a higher average daily balance, a good starting monthly and ending balance that's going to continue increasing your credit score, and seasoning the account to keep your internal banking score high, that is going to give you the approvals that you want. But if you're not, that's what's going to lead to denials, even with a 7+ credit score and good comparables. So that's going to lead me to the last question that you're probably seeing on a bunch of ads. You're probably seeing on TikToks, YouTube and stuff. Is you're probably getting people to saying like, oh, I can get you $200,000 to $300,000 in 0% funding in 30 days. And the question that, how possible is that? Okay, or is that even possible to do? And I'm just going to give you the truth as somebody that's really in the fields of doing this. Okay, it is definitely possible to do it if you have the financials to show it, because you have the ability to show the financials. Why do you want to go for no doc funding? Okay, you're only going to go for no doc funding if you know you don't have the financials. But if you have the financials, show the banks that you can easily smack approvals. Okay. Now on the other side of it, if you don't have the finances, you don't have any documents, the answer is it literally all depends on these three factors. It depends on your credit profile, your business structure, and your banking relationship. If all those are hitting, yes, you can get access to 200K to 400K in 30 days. Okay. But it all depends, and it's going to take time. You have to be patient. You could get in 30 days if everything is aligning perfectly, but for the average person, it's unlikely for that to happen. You're gonna have to allow your accounts to season and build up your credit, okay, and restructure your business, maybe even like your business age or get an age corp or something to where you can access this. Okay, I'm just letting you know that truth up front. It's possible to get 200 to 400K in 30 days, but if you have no financials, it's really all going to depend on these buckets and these factors that I talked about, and it is going to take time. You have to season your accounts. I just literally broke down why you got denied with a 700 plus credit score. Okay, and like I said before, you're playing a whole different ball game once you get here. So there's a lot of things you have to do, and that is exactly what we take care of inside the program, because it is a lot. But we simplify this, we take care of this for you, so you're not walking into the bank blindly. You're walking to the bank with confidence and clarity, knowing that you're going to get access to funding. So what I want you to do is this, okay? First off, if you like the video, go and click the like button, and go and click the subscribe button too, so you get notified whenever I post, and you get notified when I'm dropping more gems and soft skill. And if you are a coach consulting and you want to get access to over $100,000 up to $300,000, so you can scale and invest your business, whether that's testing ads, hiring new systems. So I'm just saying this. I'm a coach or consultant too. You need money to test. You need money for systems. Okay, that is why you want access to funding, so you don't have to use your cash reserves or continue using your personal credit. If that is you, I want you to click the link below in the pinned comments. You're gonna speak with me. We'll go over your goals. We'll create a funding strategy and tell you exactly if you actually qualify for the funding that you need, and if you do, we'll tell you the next steps and actually show you what that strategy actually looks like. So if that's you, go and click that link below and book a call to speak with me. Now, with that being said, we're at the end of the video. Like I said, like the video. And if you haven't already, go and click the subscribe button below so you get notified when I post. And you get notified when I'm dropping these gems and sauce. And with that being said, I'll see y'all in the next video.